Hello everybody, this is Matador from freetradingvideos.com. It's Thursday, January 21st, 2010, and it doesn't get much better than this. It's exactly what I was talking about pre-market before the open. When you can find a day like this and you can assess how the markets are interpreting data, in other words, not getting a good gap fill, not working to make higher swing lows, getting amazing confirmation from market internals, this is not too shabby. So anyway, nice little move, pulled back to support, made a lower swing high, and then at the 1370 mark basically fell out of bed. Didn't even hold up at support until it came all the way down to the 112.40 area, and then into the 112 mark, and now we've tested 111.63. I had mentioned if we could hold up above 112, which would coincide with the 50 MA on a daily chart, again we're looking at the S&P 500, that we would still be relatively bullish. But this is, I wish I could separate this day's bar into at least two and have that pullback be a little bit more controlled. The volume print that we're going to get today, it's 12 o'clock p.m. Eastern Standard Time. If we keep up this kind of volume, it's going to be pretty high. And then we're also testing the 50 MA now, almost to the penny, so we're getting a bounce at this mark right through here. So anyway, intraday, that seems like a relevant level of support, and we're seeing a higher swing low. If I go out here, up into what I would consider a pretty good resistance area at the 112.20 mark, where it's actually happening right now. Support, 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 breaks hard. One test of resistance, higher swing low. If we can work through this 112/112.30, excuse me, 112.20, 112.30 area into the next level of resistance at 112.40.60, then that would be one of the better case scenarios of the bull side today. But again, tons and tons of resistance. Looking at the market internals, we'll just start with the trend. Again, beautiful. Up to 1.5, stayed there all day long. We're at 1.83 right now. The trend Q, a little bit of a sticky wicket, to use an English term, has stayed bullish levels all day long. So there's a bit of a problem with that, at least not tons and tons of volume flowing into stocks on the decline, which doesn't quite match. So I take that, I drop that into the VIX, and there's the best confirmation of the day. We talk about the VIX, made a nice swing low here and just skyrocketed basically all day long until right now. One other divergence, if you want to talk about it, is the Bank X. The Bank X actually just broke out of, I was talking to D7 about this just a little bit ago, this 1750 mark. This can be considered a couple things. One, an intraday ascending triangle into the 61.8% retracement of this last sell-off, which it is. It's also, just to clean this up, could be considered a bear flag. So if this had broken down and made some swing lows here, then that would be great confirmation of a breakdown, further breakdown. Right now we're actually getting a breakout, and a lot of times the bank will support that. Obama this morning, part of the sell-off, people do not like change, and in my opinion they were talking about tougher regulations for banks, and so people, it looks to me like they're running for cover a little bit here, but as disastrous as this looks intraday, and it's no slacker of a bar, I'm still going to hold my bear side in check here, do a little bit of a gut check, and see if I can get a higher swing low yet, even above the 112 mark. 112 is still fantastically relevant right now. This whole area that coincides with the rising 50, the schisms we have between the trend Q, the banking sector, and then the VIX and the trend need to be addressed. So not saying, not trying to tell you to miss out on any opportunities, but just be a little bit more wary, at least at this moment in the markets. Sometimes this is the move. So good stuff. I love talking to you guys. Again, when you find a day like yesterday and you can see how it's digesting news and you have big unfilled gaps like this, and you retrace to the 50-yard line, and then you see how the good news was failed to be digested well even in the morning, and then you get a sell-off like this, sometimes you can be on the right side of the market, and that's not too bad. So good stuff. Hope you guys have a great rest of the trading day. Stay tuned for D7's video at the close. He's got some good stuff to talk to you about with regards to our discussion a little bit ago on some other market internals, and we'll go from there. Have a great rest of the day, everybody. Bye.